Hello and welcome. You're watching Earnings Edge here on NDTV Profit, and the first company that we are going to be talking to is Borosil Renewables. It's been a couple of challenging quarters, largely because of dumping, and we're going to talk about that, the implications on the company, as well as what we can expect going forward. And for that, we have with us Mr. Pradeep Kumar Kheruka. He's the chairman of Borosil Renewables. Mr. Kheruka, good afternoon. Thanks for joining in. We know that the company has had, to go through the implications of dumping, because of which we've had a severe erosion in your EBITDA and thereby leading to a bottom line loss coming through. Can you tell us about whether or not there is light at the end of the tunnel, and when can we in fact expect the company to go back into the black? Considering the current conditions, I believe that there are two aspects to it. Besides the lower prices, we are also looking at increased interest costs as well. Can you take us through some of these challenges at the moment?
Sure. Thank you. So the fact is that the exemptions from payment of import duty on solar glass were to have come to an end on the 31st of March 2023. The government in its wisdom decided to extend it by a year, last year, and these were now set to come to an end on the 31st of March 2024. For the whole year, we have been petitioning the government, showing them that there is a lot of dumping going on, that the prices of solar glass being imported from China have suffered a steep decline, while the prices of inputs, the commodities that are used to manufacture the glass, have actually registered a sharp rise. So this is paradoxical, where the cost of inputs is rising and the price of sales is declining. It's clearly a predatory move designed to eliminate competition. Fundamentally, solar glass has been eliminated, production has been eliminated from nearly everywhere in the world, except for a company in Germany and our company in India. So the fact is that India has been showing a lot of interest in the production of solar glass, so much so that now 5 new manufacturers have entered into the field of production, and of whom 4 are already in production besides us. That means there are 5 manufacturers comprising the solar glass industry today. Now, the thing is that I think the Chinese decided that they need to deal with this with a strong hand, and they have reduced prices far below cost to try to squeeze us out of the business. Under these circumstances, it is we were bewildered, frankly speaking, and disappointed to see that the government chose to further extend the exemption from payment of any kind of duty on imports of solar glass all the way till 30th September. Now, this flies in the face of government's own reasoning, their own policy, because they have imposed a 25% basic customs duty on imports of all solar cells, and they've imposed a 40% import duty on the imports of solar modules. So under these circumstances, to have decided to exempt imports of solar glass makes no logic to me and to other members in the industry. So we hope that the government is not going to extend this exemption beyond the 30th of September.
Okay, right.
Yeah.
No, sir, please go on. I'm sure a lot of investors would want clarity, beyond that. So if you could take us through what we can expect going forward, because should the current circumstances prevail, would it mean that the company will face a challenging time going ahead?
Well, everything is dependent. We live in a very dynamic world, frankly speaking. And there's nothing which is cast in stone. So while we have been suffering from the weight of this predatory pricing, it has also driven us to explore ways and means of enhancing our production and trying to squeeze out more productivity from the existing production setup. After all, we've been in the glass business for 60 years. And we have a little bit of experience in glassmaking, I would say. The other thing that we have done is that the field is open for imposition of anti-dumping duty. We have already made an application for imposition of anti-dumping duty on imports of glass from China, and a second one for imports on glass from Vietnam and Malaysia. So this is already with the Director General of Trade Remedies, and in some time, in due course, this is going to come up for consideration and action if deemed necessary by the government. While we are already pursuing this issue of the 45, of the anti-dump basic customs duty. Now, what we are also doing is that we are making efforts to see what we can do to reduce cost of production and improve productivity. Have I lost you by any chance?
Hello? Very much with us, sir.
Oh, okay, very good.
Yeah.
So we are making efforts to do that. There's a possibility that we might improve our showing a little bit. We might say that we've hit rock bottom already. So if anything, we should be going up a little bit in terms of our costing and so on. And we are very aggressive in our approach to doing business. I hope that we should be able to prevail upon these circumstances.
Sure. So if you could also now talk to us about FY25, because two of your European acquisitions will fully come on stream, and we will have a full year then with them as a part contributing to the company. So what kind of expectations do we have on the top line? And once again, I do understand your top line to a certain extent will also be determined by the very, very volatile pricing environment that we have. But perhaps if you could give us an idea about the kind of contribution that these new European acquisitions can make to the company.
So our European acquisition took place in October 22. We've had a bumpy ride there because in the year 22, the continent of Europe was still struggling with the prices of exorbitant prices of natural gas and electricity, which had been already hedged by the previous management, so we did not suffer that badly from it. Having said all that, we undertook a furnace repair in April 2023, after which we are now back in full production, 350 tons a day, and we have got a top-rated manufacturing team with us there. The product is highly regarded in European markets by our customers there, so we are set for everything there, frankly speaking. Right. Except one thing, that the same predatory pricing which is impacting the Indian market is also impacting Europe. And so therefore, the manufacturers of solar glass, the manufacturer of solar modules in Europe have suffered greatly. Right. And they have reduced their production significantly. They have also been petitioning the European Union and their respective governments for strong support against the Chinese activities. So we hope that something is going to come out of that. The matter is currently in discussion with the Bundestag, which is the German parliament. I've had meetings with the Minister President of the state of Brandenburg and the Minister Energy as well. And they have urged us to hang on. And they have said that they're going to do their best to make sure that a suitable package is developed over there. Right. So we are battling there, but we are not without hope. Let's put it that way.
So again, please correct me if I'm wrong. In the second quarter, you had stalled some of your capacity expansion plans at the moment. Is that the case? One. Secondly, is that because of your current prevailing environment? And if that is so, when do you expect to resume that expansion?
So I wonder if you're thinking or discussing the 1,000 tons per day.
Yes, sir. That's the one. Yeah.
And that is certainly on hold at this time. Right. Because that would not make any sense for us to pursue at this time.
Sure.
When we are still trying to stabilize on this one. So we have all the land for that. We have part of the capex for that has already been spent. So we have a batch house which is capable of handling that second project whenever it comes. So the cost of that project would stand diminished to that extent. It would not need a separate batch house. So right. we are well poised to expand if we get requisite support from the government.
Fair enough, sir. Mr. Kheruka, we'll leave it at that. Thank you so much for spelling it out for us more clearly as to what the current environment means. Of course, we will all be hoping for an improvement. Certainly the shareholders will under the current circumstances. Thank you so much for joining us and taking us through the many factors there.
Thank you. Okay.
Right. Well, that's the management of Borosil Renewables enumerating the various challenges. And of course, all the course of action that the company is taking, but a lot will depend on the environment as well as the authorities at the moment, where, of course, in dumping certainly plays a little bit of a havoc when it comes to the profitability of the particular company. We'll continue to give you updates on that one. But on that note, it's time to slip into a short break. But do stay tuned. We have lots more on the other side. Welcome back. This is Earnings Edge, and now we take stock of Greaves Cotton. It's been a relatively strong quarter for this particular company. Of course, a lot of that is to do with engines and e-mobility as well. Well, we are in conversation with Akhila Balachandar. He's the CFO of the company. Akhila, good afternoon, and thanks for joining in. Well, the question for you
at the moment, and thanks for inviting me over on the show.
Most welcome, Akhila. My question to you is that it's certainly been a good quarter and a good, very strong, first 9 months of this financial year as well. My question is, do you expect this momentum to sustain going into not just the fourth quarter, but also FY25? And, well, what are the contributing factors here as far as your performance is concerned?
Sure. So as you rightly said, it's been an extremely satisfying quarter for us, and also an extremely strong and satisfying first 9 months of the year. So let me step back before we go forward. A couple of years back, we embarked on a transformation journey, and Greaves, from being a single product, single fuel, single customer company, has now diversified into 3 core verticals: engines, retails, and electric mobility. Within each of these verticals, we have embarked on different initiatives covering product diversification, product enrichment, application diversification, geographical enrichment, right? So multiple initiatives, a number of these are now beginning to play out. And I think this is a journey, and therefore we should hopefully continue in the same trajectory.
Sure. Well, so if you could actually, take us through the engines bit, because I reckon that this is perhaps your largest of the segments at the moment in terms of contribution to revenues. What kind of trends are you seeing here, and what is it that's driving growth in this particular segment?
Sure. So engines is one of our core businesses, as you rightly pointed out, and still contributes heavily to both the top line and also the bottom line. If you take the initiatives, we've been working on improving our product portfolio. So we used to be present only in diesel engines. Now we are moving towards more fuel agnostic engines. We try diversify across applications, mobility and non-mobility. The third thing we are doing is doing a geographical expansion, not just in India, but also overseas. If you remember, in May of this year, we invested in a company called Axle Control Linkage, which is wonderful adjacencies to our business and kinds of dovetails to a lot of things that we want to do. They are essentially into push-pull cables, levers, sensors, and these are things which will again go back and help us to strengthen our product diversification strategy.
A question on e-mobility as well. And I do see that it also contributes to nearly a fifth of your revenues. I want to try and perhaps understand the scope of this particular business. At what stage is India and the other markets that you do cater to when it comes to adoption of e-mobility? And well, going forward, what kind of investments can we expect the company to put into this particular segment?
Sure. Thanks, Agam. The world is transitioning to a green fuel kind of an environment, whether it is batteries, electric mobility, hydrogen. So this is something that is definitely the future. In terms of adoption, each one is in a different state of adoption and a stage of adoption, but it's a journey. And ultimately, I think more and more the adoption is going to increase over a period of time. What we are doing is we are preparing ourselves and we're very focused in doing a product development around this. We have a host of product today on the both E2-wheeler segment and E3-wheeler segment, and we are continuously improving our product portfolio. We're currently in the process of adding new products in the E2-wheeler business. And we are currently live on social media with planned the next big thing, the social media launch that has happened, where we are doing a journey from Kashmir to Kanyakumari. So you can expect some really strong product launches from us going forward. And this will only help fortify the business and product offerings.
I do notice that at least as on last year, you guys had nearly no debt and you guys have a substantial amount of net cash positivity. My question then is that in terms of expansion, what are the plans at the annual? And under those circumstances, are we all, or have you already perhaps increased debt, or are we looking to perhaps raise more funds through debt, or will any sort of expansion be funded through internal accruals?
Thanks for this question. Really appreciate. Look, we are currently practically zero debt, and we have a strong cash built out in our books. This really helps us to, kind of look at acquisitions. We did one acquisition, which I mentioned, the Excel control linkage, which is really adding to the entire product proposition. We would similarly be looking at very interesting opportunities as and when they come to us. In terms of debt, as you rightly said yourself, we currently have no debt on our books. And if required, the management and the board will take an appropriate call. And definitely, debt is something one will not rule out. But I think a good mixture of debt and equity would be only to, ensure also how we are able to improve our overall return on capital employed.
Sure. And a final word on the outlook, perhaps going into FY25. I understand you can't really give me a guidance if you don't need me to, or I don't need you to. But, we have seen the first 9 months seeing a good 25% in your volumes growth for engines. But electric mobility volumes, however, have taken a little bit of a backseat and have seen a decline. My question really is, in terms going into FY25, what sort of a ballpark run rate range can you provide me with, help me with, and what can we expect there?
Agam, as you rightly said, it was not possible for us to share guidance. But as I said, and if you really see the trajectory of the last 2.5, 3 years of this company, in terms of revenue, there has been a robust growth. In fact, this quarter, we've done a 30% year-on-year growth. If you take margins, we've done a fairly steady improvement in our performance. In terms of product portfolio, and as I said, we've just launched a campaign around the next big thing, and we have a social media campaign where the product is going on a drive from Kashmir to Kanyakumari. So all this, I think, is what I would be able to share, and hopefully this is something that will play out over the future.
Sure, fair enough, Akhila. We'll leave it at that. Thank you so much for joining us and taking us through the quarter gone by, as well as what we can expect going forward.
Thanks very much.
Thank you. Well, that's the management of Greaves Cotton telling us about, potentially positive prospects going into the next financial year as well. And from there on, we move on to Wonderla Holidays, where the net profit, sunk by as much as 4% in the third quarter. And this is where my colleague Pallavi spoke to Arun Chittalapilli about the reason behind this decline. This is a slice of that conversation. Listen in.
Yeah, so our operating profits are slightly lower this quarter compared to previous corresponding quarter, mainly because we've had a lot of management bandwidth into the system. We have actually hired almost 60 extra headcount into the company, keeping in mind that we are looking at growth in new cities. Some of them are top level executives and some are park level executives in our new projects. So that's one reason. The other reason why we have slightly lower margins is because our marketing and promotion spends have gone up a little bit because we had a lot of footfalls in the last quarter from institutions where we share margins with third-party agents. So these are the two reasons why we have slightly lower margins.
Okay, all right. I do want to understand what's been happening on the parks fronts. Have we seen any openings in recent times? And what's expected to drive growth in the next quarter?
So next quarter, we are not opening any new parks. It's going to be the existing 3 parks which are going to contribute. But starting from Q1 in the next financial year, our newest park in Bhubaneswar will be on stream sometime late May. So that will add some revenues. We are expecting roughly about 5 to 6 lakh visitors in the first year, at an ARPU of between 800 to 1,000 rupees. So that's going to be an additional revenue going forward for the company. And in FY26, we will have our 5th park in Chennai, which will also open second or third quarter.
Okay, all right. Could you guide us through what is the land acquisition strategy? Has that been completed for these parks that are coming up? And how do you propose to go ahead with that?
So land acquisition for our 2 new projects have already been done, which is Chennai and Bhubaneswar. But on top of this, we are also looking at land acquisition in Madhya Pradesh, in Indore, Mohali in Punjab, and also in the Greater Noida region in Uttar Pradesh. So these are the 3 other new projects that we are looking at. We hope to conclude land acquisition in at least 2 of these new locations within the next financial year, and we'll make an announcement when it is done.
Right, that's Wonderla Holidays telling us about a new park in Bhubaneswar opening up in the first quarter of this upcoming financial year, and also giving us an idea about the kind of revenues we can expect, at least per head. But with that, we are completely out of the time on the show, but don't go anywhere. On the other side, we get you India Markets Close. Stay tuned to NDTV Profit.